How to invest in 2025. Hello everyone, my name is Hunter, and today we are going over a good investing strategy for 2025. First of all, if you're here watching this video right now, you have definitely figured it out. Even just having a simple understanding or knowing that you want to start investing is huge, and you are miles ahead of other people. This is not something people just want to do or look up all the time. So congratulations, and I hope you stay along for the journey. To go along with this, the average person doesn't even find out about investing or financial literacy until 30 years old. Okay, in 2025, one of the best strategies that we can implement when beginning our investing journey is to slow down, make sure we are doing things correctly, and invest for the long term. Long-term investing has been proven to be the #1 strategy with the least amount of risk for a very long time. But you may ask, okay, what do I invest in? Well, I'm glad you asked. Today we are going to mainly go over index funds. An index fund is basically a giant bucket of stocks. Now you always hear, oh well, diversify, that's what's best for you. And that's probably going to make you more money over the long term and decrease the amount of risk that you're taking. While yes, this is true, you don't want to just go out and cherry pick random stocks and say you're diversifying. But instead, you would buy an index fund. They have all different kinds, including technology, regular S&P 500 fund, a total stock market fund, and even some growth. My favorite index funds out of the ones available to choose from would have to be with Vanguard. This is one of the oldest investing institutions aside from Fidelity. #1, we're going to look at VOO. Now this is an index fund that strictly tracks the S&P 500. And the S&P 500 are the top 500 companies in the United States. While you may say, well, why don't I just buy each company? Well, I don't know about you, but I don't want to spend all day long going through and buying each company that I know is in the S&P 500 when I can buy one index fund that has all of those companies combined at a very low cost. I believe their expense ratio right now is only 0.04, which is extremely low compared to others. And as we saw, VOO, since it has released until now, has yielded 517% total return. This is insane. If you had bought this index fund when it was first released, you'd have 5 times your money. Now, yes, while this one is great, it doesn't offer all of the stocks in the United States market, which you may say, hey, if we're talking about diversification, why don't I just buy them all? Well, you absolutely can with this one, VTI. This is Vanguard's Total Stock Market Indexed Fund. Personally, one of my favorites because it includes over 4,000 stocks or whatever number is available at that time, because the number always changes to how many publicly traded companies are available in the United States. But it includes all of them. This has yielded 481% since inception. Now, it may not be 517%, but it's pretty close, and you get a little more diversification. With this one, if you notice and go back and look at the VOO chart, it also doesn't have as large of valleys or as high of peaks, but it is kind of more steady, going up over time. This tends to be good for a little more emotional investor, because when the market is taking a big hit, this one doesn't take near as much of a hit than VOO does. Still a wonderful index fund to buy. And #3, we're looking at VUG. Now this one, if you noticed, blows everything out of the water. It has increased since inception 912%. That is 9 times your money. So if you had bought $100,000, it would be over $900,000 today. That is insane. And it really hasn't been around that long. But this is Vanguard's Growth Fund. This is definitely my favorite out of the 3. But of course, it is my favorite because I'm young and I have time on my side. this is a little bit more volatile when it is compared to VOO and VTI. But because it is a little more riskier asset, fortunately, it has yielded a higher percent return. Now, after looking at these, you may say, okay, that's awesome. Those are some great returns, but how much do I know to invest? Or how much should I invest? Well, we're going to look at this from the statistic of a new car payment. If you have a brand new car, the average payment in America is $749 a month. That is a lot that you could be investing each and every month to build your future money. I will put this math on the screen, but for this example, we will use starting with $0 and adding the $749 per month for, let's say, the next 25 years. And we're going to do an average of a 10% return, and this will yield us over $900,000 in 25 years. Now, of course, I use the average United States car payment because if you're asking, well, where do I get this money? Well, if you have a new car and your payment is somewhere close to this, instead of having that new car, you could be investing in any of these or all three. Yes, of course, some sacrifice may have to come into this. Maybe get rid of the car and get something in cash, or maybe just get a cheaper car and have a lower payment and then take the rest that you were paying on the other vehicle and start investing. Anything is better than nothing at all. This is the way that I've been investing for quite a while, and I believe that it will continue to yield you the best results in 2025 and years to come. I hope you learned something in today's video and realize that investing is important and that we need to get on it as soon as we can. Thank you so much, everyone. If you have any questions or things you want to see in the future, put them in the comments below, and subscribe for more traditional wealth tips.